Hi, good afternoon, everyone. Welcome, everyone, to the Sygnum February 2024 House View. Thank you very much for joining us again. As always, I'm joined by Katalin Tischhauser, Sygnum Bank's Head of Investment Research, for this very exciting session. Hi, Kat, how are you?
I'm doing great, thanks. How are you?
Fantastic, fantastic. But as always, all the content and opinions presented in today's live stream are not investment advice. So that said, let's get going. We've seen some remarkable analyst predictions for Bitcoin recently. Bernstein said it could hit 150,000 by 2025. Multinational bank Standard Chartered estimated Bitcoin to increase to 100,000 by the end of this year. And last month, they even said it could top 200,000 by the end of 2025 if the ETF-related inflows materialize as expected. So let's dive in here. Katalin, these forecasts are overwhelmingly positive, but digging into it, what are the fundamental drivers that you see supporting these big forecasts?
Yeah, it's these forecasts sound quite hyperbolic, just hearing them, and I would say they're not crazy at all. They're basically rooted in the assessment of expected inflows, like you mentioned, Standard Chartered, and I think just looking at the retail and the ETFs is half of the story, or not even. Basically, they're rooted in the expectation of these inflows versus the size of the market. Obviously, this has been a long-standing expectation in crypto that one day trillions of assets will be chasing Bitcoin, right? But this one day just did not seem imminent at all, for very good reasons. It was, yes, one day pie in the sky, but it wasn't really reasonable to expect it to happen anytime soon, but now it is. And the catalysts for this are, of course, the availability of easy to invest familiar products with the US Bitcoin spot ETFs. It is also the credentialization of the asset class, the involvement of the world's largest traditional finance institutions, basically put crypto on the map and made it acceptable. Rhetoric from leading figures, very significant. And this is also accompanying a perception that crypto kind of cleaned up its act, with the FTX situation finalized behind us, Binance's compliance problems resolved positively. Basically, this made the asset class acceptable and investable for institutions. And we are seeing good, strong net inflows into the ETFs, and these are accelerating. But I think the institutional opportunity is greater still. This narrative that crypto as a portfolio diversifier, crypto as an asset class that has a place in institutional portfolios, this is gaining traction. It, of course, makes sense because of the uncorrelated nature of the asset class and also the medium to long term opportunity. Institutions are now seriously considering it. Some have started to invest. And if you think about it, the size of these allocations versus the market, of course, that's where the forecasts come from. The global asset management industry is $100 trillion. So, just pick a percent, even a fractional percent, right? And that's not just asset management firms, it's also corporate treasuries and so on. And if you look at, for example, the market cap of Bitcoin, about 1 trillion currently, but actually that's a hypothetical number. Nothing like that is available in the market. First of all, about roughly 20% of Bitcoin is believed to have been permanently lost. And this is because in the early days, it was worth very little, a couple of pennies. People didn't really take care of holding on to it. They didn't guard their keys and so on. And once you lose your keys, if you didn't custody, now you can be third parties. But at the time you lost your keys, it's gone forever, no way to retrieve it. So quite a lot is lost. So that hypothetical 1 trillion is not that. And on top of that, so much of it is illiquid, right? Long-term holders are roughly at an all-time high, roughly 70% of the market cap. And basically, a lot of people who have long believed in the opportunity of the asset class held through bear markets, downturns, bull markets, didn't sell. They're not about to sell. Eventually, after a lot of performance, there is some profit taking, but there's a lot of illiquid holdings in crypto. So if you look at the liquid market capitalization that's available and compare it to whatever your expectation is for inflows, there's a huge imbalance. So I think that's where the numbers, people can pick their numbers and make their forecasts, but that's what these forecasts are rooted in, and they're not crazy.
Yeah. I mean, can we double click a little on the ETF inflows? I mean, did these materialize as people expected?
I mean, I think so. I mean, I cannot speak for, but a lot of the expectations are over the year. There's going to be a lot of ramp up, huge marketing campaigns, institutions kind of slowly approving the product, putting it on, on the approved list and so on. So clearly the forecast, we have to look back at the end of the year. But the early inflows, I would say, exceeded expectations, right? Mm-hmm. Initially, there was a lot of rotation because some product is very high fee. There were also redemptions from, as we know, the grayscale, and then inflows into other products. There was rotation from the futures ETF into the spot ETFs, but the net inflows were there straight away, and they have been accelerating. So at this point, the last 5 days, they have been between $350 and $650 million every day. So that's huge. If you rank the highest ETF inflows of the world, including the S&P 500 ETFs, the NASDAQ, like really the biggest ETFs in the world, where there's a lot of, there's a lot of flow, Bitcoin is in the top 5. And that's incredible. The BlackRock ETF is now 5 billion AUM. And it's only been out there for a month or so, right? The ETF analysts who have been commenting on the Bitcoin ETFs a lot and talked about it, they said that basically in the ETF world, if in the first month an ETF gets to half a billion AUM, that's a roaring success in ETF world. So basically in a month getting to 5 billion, that's incredible, and that's just one of them. And there's like several that are above, like 4 or 5 are above half a billion. Now, other than these inflows, there's of course other things going on in the market. Exciting drivers. There is a rotation from gold ETFs into Bitcoin ETFs, right? And this also makes a lot of sense because, in terms of safe haven assets, you also want diversification there. If you think you want safe haven assets and macro hedges, you cannot be sure whether the pros and cons of Bitcoin versus gold will prevail. You want to diversify. So we're seeing that as well. And then we are, of course, seeing, speaking about safe haven assets, that the global macro picture just continues to underline the wisdom of investing in alternative assets and specifically in safe haven assets. Just last week, Jerome Powell said that the US government is on an unsustainable fiscal path. That's not good. There's the commercial real estate crisis brewing in the US, but now it looks like globally. And there's some examples of worrying conduct, like you could even say negligent conduct by some of the stewards of the Western monetary system. Just to give you an example, there is this banking BTFP program, this facility that was created after the banking crisis last year to provide liquidity to banks. And basically, this created the way the rates were set. As a bank, you could borrow from it, put the money straight back into your Federal Reserve account, and take out 50-60 basis points of just money from the Federal Reserve. Now, this went on for months before it was basically noticed and shut down. So all of these instances underscore the wisdom of having this kind of a diversification, having these various assets that you spread your investments across. And then on top of that, we always say in crypto, when the markets are very difficult and we are having a really tough time, we always say build in a bear market. This is the time to improve your processes, to innovate, to And we now see we have been building in the bear market. We are seeing a lot of innovative launches, a lot of exciting things coming out. So that's also fueling the positive sentiment and the move in the market.
Yeah, and certainly not least with Ethereum. I mean, it's not all about Bitcoin as it really should be in this diverse market. And what might the hotly anticipated expected Ethereum ETF mean for that protocol in the market?
It's of course it's an additional positive for the market. So that's unquestionable. It cannot be a negative, right? Now there's a lot of debate about how significant the Ethereum ETF will be for Ethereum. There's divergent opinions. There's some people who think very, very significant repeat of the Bitcoin ETF price moves. We should expect the same in Ethereum, hugely significant. Some even think more significant because Ethereum has a smaller market cap and has been underperforming, so it can go even further. There's the other side, people who say it will not matter that much, that Ethereum is maybe not recognized as a store of value, and or safe haven asset is definitely a store of value in a way, but not a kind of widely accepted safe haven asset, so that narrative maybe wouldn't feed it. But at the same time, people may look at other parts of the market. Now we had Bitcoin, but what else is there in crypto? And of course, Ethereum is bringing the smart contract platform, the applications, all the other things that are going on in crypto. So this can be debated, right? To me, and this is debated. This is what's going on, pros and cons arguments. How significant will it be? Not very much, very much. To me, BlackRock is involved. They'll be pushing it, they'll be marketing it, they'll be bringing it to their clients. I expect that this will be significant for the Ethereum price. And on top of that, let's not forget that Ethereum is currently implementing this very important scalability upgrade. Now they've deployed it on testnets. It's going live 13th of March. This will reduce the cost of transacting on the platform by 80 to 90%, hugely significant. This will allow the layer 2, the scalability applications on top of the network to also lower their costs. They're already cheap now. They're going to be 10x cheaper. And I think this is going to be an important catalyst. And then we see Ethereum is being used now increasingly. For example, other protocols use Ethereum security. So use the Ethereum network as a security layer. And the protocol, the main protocol that's basically transacting this, it launched relatively recently. The TVL, the total value locked, is already at $7 billion. That's huge. So there's a lot of growth from there as well. Quite a lot going on for Ethereum. I'm excited about that.
Me also. So we're at this time of the cycle again. The Bitcoin halving. Some are saying halvening, which I also like. But is it important and significant? What's your view?
It is very significant and it is very important. It's very positive. I would say, though, that it's not necessarily for the reasons a lot of people say it is. First of all, in terms of, there are arguments that because fewer Bitcoins are newly created, Bitcoins are given to miners, selling pressure on exchanges from miners will reduce, and this would exert an upward pressure on price. This is not the case. This used to be the case when the mining rewards were huge. That alone caused the first couple of bull cycles in crypto. It was so significant, this reduction in the selling pressure, that was the bull market. But now, after several halvings, the reduction is so small. It's less than 0.1% of the daily traded volume of Bitcoin. That cannot do anything to the market price. And also, I personally don't believe in kind of the magic, that that if we look at the halving, we don't know why, but every time the price goes up, we have no idea why. We cannot explain. I like to explain things with facts. I like to understand what caused it, because something had to have caused it. And in the early halvings, the halving caused it. Absolutely, no question. Currently, if we look at what ignited this bull market we're in now, it was the BlackRock ETF filing. Absolutely, it wasn't the halving. But having said that, I'm just commenting on other narratives out there. Having said that, the halving is very significant and very positive. And it is because it highlights and underscores the core value proposition of Bitcoin, the immutable scarcity. And right now, this narrative is something people really care about. With the macro stresses, with Bitcoin increasingly regarded as an important safe haven asset, the diversifier, even as we said, versus gold. Institutions looking at it for their portfolios. So underscoring, highlighting it, having a lot of awareness of it and noise around it, I think is very important and very positive for Bitcoin and the market.
Great. So I think that's about all we've got time for today. Thank you everyone for joining. Thank you, Katalin, for unpacking that and giving us your views once again. But for a deep dive into this and other important topics in the crypto market, please head over to sygnum.com and download the February House View. It's on our website, Learn section, and then Research and Education. Please also visit us for more information about Sygnum and join our now 30,000 plus community on LinkedIn to stay updated on all of our launches, news, and research. So it's goodbye from me. Thank you very much, Katalin, and wish everyone a fantastic day.